Joining us right now is Leo Tilman. He's a risk expert and CEO of the strategic advisory firm Tilman Co. He's also the co-author of Agility, How to Navigate the Unknown and Seize Opportunity in a World of Disruption. And Leo, it's great to see you, and specifically to talk to you actually about Leo's comments, Warren's comments, because he's trying to assess risk. And I'll tell you, there was one moment during that virtual meeting that happened on Saturday where he said that he had $137 billion on hand. And he said, it isn't that huge when you think about worst case possibilities. So as somebody who spends their life thinking about risk, what did you think of his assessment?
Look, I think he's right on. He's acknowledging a huge uncertainty that is facing investors, companies, governments. And what he's thinking about is a range of outcomes that can come out of this pandemic. As a matter of fact, I think he's doing a much better job than a lot of the companies and investors that we have spoken to who tend to be quite optimistic following the Fed actions, following the stimulus. They believe that any kind of global financial crisis will be averted. So they're not necessarily thinking about the range of scenarios and really adverse outcomes the way Buffett is thinking about them.
And so how are you thinking about them personally?
Well, when we speak with investors and companies, we tend to classify the risks and uncertainties that they face in three buckets. One has to do with the path of the recession and the upcoming recovery. And in our mind, they are not considering as wide of a range of these possibilities. There's a narrative going on in financial markets that this is going to be deep but short recession following by a V-shaped recovery. And we think it's going to be incredibly difficult to orchestrate given what's going on. So we have been working with decision makers on envisioning a wide range of outcomes from inflation and stagflation that stem from this enormous printing of money by central banks, all the way to global credit crisis that stems from investor companies, consumers, municipalities, and emerging market economies defaulting on their obligations. Then you have the set of uncertainties. And Buffett talked about that specifically, about fundamental change in behaviors on that part of consumers and companies. And then, of course, there's the geopolitical backdrop that is adding enormous volatility and uncertainty to that.
So that's the downside. And I appreciate that you don't think that component is being appreciated as much as it should. Is there an upside version of this that you think is even better than what's out there in the marketplace either?
It's very difficult for me to imagine that. In finance, there's a term that many use called price to perfection, where you have everything has to work out just perfectly in order for the current valuations to realize. And then there is a huge downside. When you think about the likelihoods of different events, especially having to do with restarting economic activity in the middle of the pandemic when we still don't have a national testing system, we still don't have a vaccine, it seems quite a daunting task with a lot of fits and starts. So when I think about the future, it's very difficult to imagine that you would have dramatic upside from where we are today.
So what are you advising your clients, both in the investing world and also the CEOs who are watching our program this morning, in terms of how they run their business?
In periods of uncertainty like these, one of the most dangerous things you can do is to bet everything on one particular prediction of the future, be it a V-shaped recovery or one of the worst-case scenarios that we're thinking about. This is more an exercise of dealing with uncertainty. So whether you're an investor or a company, you have to envision a wide range of outcomes across economic scenarios, across fundamental changes in consumer behavior, across geopolitics. You need to fully understand how exposed you are to these scenarios the way that Buffett is doing. Then you have to essentially prime the entire organization to go and search for the information that is relevant. So you can see what's happening, you can map it onto your scenarios, and then you act decisively, whether it's mitigating threats or capturing opportunities when you see relevant information emerging.
Right. Hey, Leo, but in that analysis, and we got to run, but in that analysis, how do you think about the discovery and breakthrough of a drug? It is possible that we will get news on a vaccine or on some other kind of therapeutic. And for those who are either out of the market, if you will, or shorting the market or are thinking about these downside scenarios, you can get caught way off guard if something great happens. And it's obviously something we all want to happen. I'm not saying we shouldn't be realistic about it, but how do you factor that into your thinking?
This is part of penetrating this fog of war, as Clausewitz described it. We have uncertainty with respect to a number of factors. So as the more proactive you are as an entire organization in watching for this data, the more adaptive, the more agile you will be in reacting to whether it's a negative news or positive news.